Next up, we have Travis Kanellos from Elevate Farm, and I think he's dialing in and also screen sharing. So let's see how this goes. Hi,
Yeah.
Travis.
Hey, how are you? Yeah, let's see if we can make this work here.
Elevate is a private company right now, hoping to be dual listed on the TSX and NASDAQ in the second quarter of next year. Elevate is a premier vertical farming company which has spent 26 years perfecting the growth of leafy greens with their proprietary LED technology, AI, and automation. They are currently completing their first standalone facility in New Jersey. In addition, they have 2 licensing agreements with facilities in Ontario and New Zealand. They do have plans for future growth, which I think Travis will touch on. And they have a very exciting, very small footprint, which allows for building in small places, as well as contract already for their product. So go ahead, Travis.
Awesome. Thank you for the intro. So I think, a good intro for us is I'm Travis. I'm the Chief Strategy Officer at Elevate. We've been at this now for, well, in an R&D sense, we've been at it for, 15 years. Really interesting story for us. We started in photobiology way back. And as we've kind of gone through this process, we've built tech, we've built IP, we commercialized that tech. And that's where really the business started and really took off. It was about 4 years ago. The idea was, and always has been, how do we grow leafy greens at scale? How do we do it effectively and efficiently? And how do we sell to the masses? We had a really interesting start to the project where a huge part of our team was involved in growing leafy greens on the space station. And that component of the R&D was a really unique piece on how we got to where we are today. So we get asked a lot about our secret sauce and how we do things, but it really stems from that photobiology kind of footprint and background that we have. So 4 years ago, we built a partner facility, a commercial pilot facility in Toronto, DVP and Don Mills for anyone that's local. That was really our first real kind of kick at the can to say, hey, we can commercialize this tech. Let's put it into operation. Let's get leafy greens rolling out the back of this thing, and let's push forward. That facility at the time was the highest yielding per square foot facility on the planet. It's extremely impressive. If anyone has been there on the call, amazing. I invite anyone to stop by and visit us, because I think it's a real kind of unique and elegant piece of engineering. So that was the start. We used that facility to test in markets, mostly Toronto, for high-end chefs, to the Bucas and the Bar Isabels and the Oliver and Bonaccini's of the world. And that was really our test piece to say, hey, we can grow leafy greens. The quality is amazing. It sits in that bio category of non-pesticide, non-herbicide, far above organic. It's not touched by a human effectively. And that for us was, hey, how do we then take this to the next level, and how do we feed millions of humans? Part of our IP is not only how we grow things on the know-how side, but how the facility functions fundamentally. And I just want to make sure everyone's still, can everyone still see the pages? Because I'm seeing scrolling pages, and Deborah or can you see that we're still moving?
It looks good to me. I'm just going to.
Are we on page 4 or no? Because I'm not seeing.
Oh no, I'm still seeing.
I'm still on page 1. Yeah.
Okay. We're gonna have to fire this back up here to make sure that it's working here. I think there we go. Better. So the IP is the fundamental base on how we grow leafy greens. Effectively, in a facility, we have what is called a tunnel. What we do that's very unique is we grow a lot of leafy greens in a very small footprint with very few humans. And effectively, the numbers look like a tunnel of leafy greens is approximately 1 million pounds inside 5,000 square feet. And we do that with 8 employees. And that's the uniqueness to what we do. We grow field grown equivalent products at scale inside a very small footprint with very few human resources. That allows us effectively to sell to wholesale markets like US Foods in the United States, who we're currently working with, and have pretty nice margin. We've seen a sector in leafy greens in production and controlled environment systems and indoor agriculture, for lack of a better term, vertical farming, try and compete with the 1% of the 1%. And that's fine. There's a business model there, but we believe you need to produce at wholesale margins and commodity pricing to feed the masses. And that's where we feel we fit in. That's the gap that we fill. I think everyone's relatively aware of the ESG component of the sector. You know, we're 99% more efficient than land and water resources. The human resources are obviously far less. So we're not going to dive too deep into that. But what I want to do is I want to dive into a little bit about, we talked about the IP and how we got to where we are right now with the less labor component. Our IP allows us to grow field grown equivalent greens. We do it in such a small footprint that we can plug in a facility or a tunnel into any DC or distribution center in the world. And that's the ultimate goal here. So our first facility in Toronto was only 1,000 square feet, produced about 50,000 pounds a year. Our second partner facility that is commercialized now is in Niagara. We've partnered with a group there. We licensed the tech and IP to them, help them build out a facility, help them operationalize it. That facility is a 1 million pound facility. It is ramping up to 1 million pounds as we speak. Started last year in real production numbers. If you get a chance to ever visit, the scale between the two facilities is incredible. When you look at a 1 million pound tunnel, it's only 150 feet long, 30 feet wide, and 20 feet high. So very condensed, again, with the ability to fit into any DC in the world. Out of that tunnel, we produce 1 million pounds, blended average, depending on exactly what you're growing. And we're profitable at wholesale commodity pricing. And that is key because of the market we can reach and entry into that market. So when we look at how do we take next steps, our next steps from our partner facilities in Canada, so pilot in Toronto, partnered facility in Niagara, Welland to be more exact. Our next step is we are wholly owning, building out facilities across the United States. We are starting in New Jersey. So the components that we've built out in our current facilities, New Jersey will back onto that. It will be 1 million pound capacity to start. And after that point, that is looking to open end of Q2 next year. That is where we set our milestones on that go public process. And that would be for us, a very fine line and a very nice path to roll into an IPO. We do feel that the business moving towards a wholly owned, operationalized facility in the US and then building out multiple facilities across the US is our next step as a group. I mentioned our Canadian partnerships we have with our 2 facilities. We also have a partnership in New Zealand. That's very interesting as well, working with a really keen group there. And we're going to build out capacity in New Zealand as well. 3 tunnels on the North Island, 2 on the South Island, for a total of 5 million pounds in New Zealand as well. So I think when we look at the global opportunity, what we want to do is we want to look at it, first of all, with eyes wide open and understand that the global market is huge for leafy greens. And to break that down from a United States standpoint, so there's about approximately 9 billion pounds of lettuce consumed, leafy greens, in the United States. And it accounts for about 15% of global consumption. What's interesting about that is Our partner, US Foods, buys approximately 1.3 billion pounds of leafy greens a year. And we're starting out selling them 1 million pounds. So for us, we get the questions quite a bit of, barriers to entry. What does the market size look like? I think, that's pretty self-explanatory when a single wholesaler in the United States buys more leafy greens than our entire country does. So we're looking to expand that relationship with US Foods to 40 million pounds by the end of 2026. And as we scale that, our partner facilities in Canada and New Zealand will be scaling at the same time. So we have a unique mix of, when we started the company, we had very little resources in terms of cash. We needed to build out a model. We needed to prove a concept, which we did in Toronto and we did in Niagara. And we onboarded a partner in New Zealand to show the breadth in our tech, our ability to roll out, our ability to scale. That to us was crucial in a marketplace right now in controlled environment systems and indoor ag, where you see very centralized local production that hasn't quite scaled. And what I mean by that is there are not many facilities out there producing 1 million or more pounds per year. A lot of folks talk about the number of plants produced. That's a very misleading number. We like to talk about pounds of production because that's what our financials are based on. That's what our numbers are based on. And that's a crucial piece to understand. Is it's not about the number of heads of lettuce you grow, but it's about the pounds per square foot you produce. And that's why we feel the Canada partnership, the New Zealand partnership are crucial to understanding our ability to scale commercially, but also operationally. And then our agenda is to build out 40 million pounds in the US. And that's really key in the Northeast, when we can feed over 50 million people in a relatively small footprint on the Eastern Seaboard. The tech platform, I mentioned earlier, we have IP, data traceability, all the things you would expect in an indoor controlled environment system. We have. Our IP allows us to produce in extremely dense conditions. There are no moving parts inside our system. Human interaction is non-existent with plants inside our system. So a plant enters from one end in its first day, it exits the back end of the system. It's fully grown. It's ready to be harvested, depending on the product itself, whether it's going to clamshell or chop, wash, and bag, etc. It is then it's then put through that final processing stage. So our IP allows us to produce high yield products, field equivalent yield, comparable, 8 humans inside an entire facility, and 1 million pounds inside 5,000 square feet. We control airflow very well. We manipulate our plants as they go through the cycle. So when a plant grows from, just using round numbers, from day 1 through day 20, we have the ability to control and manipulate lighting algorithms as our plants travel through our system. That unique ability and our know-how allow us to control the outcome of a plant. And what I mean by that is we can take an arugula, we can put it in our system, and when it comes out the back end, we can control if it's spicy, how spicy it is, what the texture of that leaf looks like, what the density of that leaf looks like, and then ultimately the yield. And that's effectively what we get paid on. Quality-wise, it stays the same. So when we change those lighting algorithms, we don't actually change the nutrient feed or the fertigation. So really interesting process of how we move plants through our system. We move our plants to humans. We don't bring in humans to harvest plants. And that's the biggest thing to understand about our system, is that when you look at the industry, you have many producers bringing humans inside grow boxes or grow systems to harvest plants. We do not do that. The plants come to humans, just like any manufacturing facility in the world, and any other process, whether it's, brake pads or, medical products. We bring our products to our humans, not the other way around. Our IP and our tech allow us to do that. So when we look at effectively our business lines or how we make money, I mentioned the Canadian and New Zealand partnerships we have. We have a schedule of 9 million pounds of production for those 2 locations. We feel that those 2 locations, as you can obviously see on the map there, pretty much the furthest reaching, geographical locations on the planet from one another. That'll allow us to, again, show the tech, show the scale, and our ability to operate on opposite sides of the globe. We have a unique system where we push and pull data from our systems. Elevate owns all the data in and out of those systems. It is a black box. So when we push data to Canada or to New Zealand, that is our data. They're our algorithms. It's part of our know-how and IP on the corporate side. But ultimately, it is about showing that ability to scale. And then when we look past that into our New Jersey facility, into kind of next really phase of the company is the build and own model, where we will be in the US. We are looking to build out 40 plus million pounds of leafy greens by the end of 2026. And we will start with 1 million pounds in New Jersey. And then each facility after that will be a 8 million pound facility. So effectively 8 tunnels inside a facility, not to complicate things. So each facility will be 8 million pounds of production. We're going to leverage that relationship with US Foods, and we're going to build that out to service 50 million customers. The ability for us to either build beside a distribution center or effectively inside a distribution center, provide next day shipping and delivery to some of the biggest retailers in the world. That is a huge component for us, that our system fits inside most any industrial building, specifically DCs. And the requirement for us to do that is simply, an 8 million pound facility is approximately 100,000 square feet. When you have a distribution center with a lot of these folks that are, 500 to 1 million minimum square feet, we're an easy bolt on for a lot of these companies. The unique ability and controls that we have, again, allow us to go to wholesale market channels and sell to the masses. And I think what you're seeing, if anyone's familiar with the space, what you're seeing is a lot of very tight margined, high wholesale and retail selling costs. And we're kind of at the other end of the spectrum in terms of that market entry. Our New Jersey facility, kind of running back to the 1 million pound facility, that is where we'll start. One of the huge advantages we have is our CapEx is relatively low. We're looking at about $10 million in CapEx to build out a facility, a single tunnel facility. That is, that's unprecedented in this sector. We're probably, our closest competitor is, 2.5 times where we are in terms of CapEx. So again, it allows us to scale quickly, and, someone else's 150 million is equivalent to, our, 50 million or less. So the combination of the CapEx, OpEx, and our EBITDA is an extremely attractive component to a lot of wholesale companies like US Foods that are shipping in product from Salinas, California, Yuma, Arizona, trucking it 3,000 miles across a country to deliver to the East Coast, which I think everyone can agree is probably pretty inefficient at this point where we sit today. COVID has really opened everyone's eyes to local food supply. Obviously, everyone in this sector can provide that. The difference is we provide that at that wholesale mass market price point, and that's really key. When we move from New Jersey and we move into our much larger facilities, our 8 million pound facilities, we see similar numbers in EBITDA and IRRs and things like that. We move from, a 5,000 square foot grow footprint to 40,000 square foot grow print, which is not that large. And in the facility itself is only 100,000 square feet. So again, it allows us to be very efficient with our space and our scale. The goal, again, going back to the initial point that I had, the goal was and always will be to grow leafy greens for the masses. And can we go to retail, and can we find a retail partner to go with and sell direct and increase margins? Absolutely, we can. We have not chosen to go that route because we believe that entry is crucial, and that's a store shelf fight that we're not willing to take right now. We've raised $22 million to date. We have another round right now, which will probably be the last round before we're kind of on that public route. And we're looking to raise some more now, which will bolster us for probably the next 9 to 12 months. Our New Jersey facility is under construction at the moment. It will be completed end of Q2 2022 and is paid for. So just want to be clear on that too, in terms of fundraising in the past. And we're really looking to raise over the next, including kind of IPO, we're looking to raise about $100 million, and that will really set us on a beautiful path to building out that 40 million pounds of capacity. If anyone's familiar with the sector, I think these names will probably ring a bell. Air Farms, Calera, In-Farm, Plenty. I'm sure a lot of you have seen In-Farm in the grocery stores. And the last one there without the name is Bowery. We believe Bowery is our closest competitor. They're private. Very interesting model. A lot of similarities to what we do at Elevate in terms of how we move plants and some other comparables. But I think when we look at it, we look at two major factors. We look at pounds per square feet, which we far exceed everyone, and pounds per employee. The two biggest costs in this operation are electricity and labor, and we are extremely efficient on both. They're about 50% of our costs, but when we are 2 to 3 times more than any competitor, some we're 8 to 10 times more efficient on pounds per employee. I think that highlights our ability and our efficiencies in what we do. We've been relatively quiet thus far. We are a Canadian private, so it's as most of the folks on here, I think everyone on the panel list is public at the moment. Everyone can appreciate a Canadian Canadian private. We're on our way though, and we've made some really interesting strides in the last 16 months. COVID slowed us down a little bit, but we did construct our Niagara partnered facility in about 9 months during COVID. So we are very efficient in construction. We say it's about 12 months from start to finish. We have exceeded that thus far, but we keep that 12 months from start to finish process. So for us, it is really about how quickly can we build these, how quickly can we scale, and how we can partner. One thing I forgot to mention was we don't have, so our US Foods partnership is non-exclusive. So we can go to retail, we can go to other wholesale channels. So, US Foods, the other main competitors there are Sysco and Gordon in the United States. It is not an exclusive agreement. And we do have the ability to go D2C if we wanted to, or to retail, but we are focusing on the wholesale market right now. It's the lowest hanging fruit for us. And we do believe that is the quickest way we can gain scale, and we can show that this is a really interesting operational blueprint to a market that has probably not gotten to where everyone thought it would a year ago. We're gonna shatter that mold very quickly. Quick team, really interesting experience with all of us. We've got someone in our CEO and a Min who has was in paper manufacturing in an extremely difficult, low margin industry, created one of the first ever automated guided vehicle plants he had several plants across North America, which was extremely, at the time, cutting edge. Per is our chief tech. Per is the photobiology brains behind what we do. His experience in photobiology and working with groups like NASA and the ESA and some the best universities globally is a huge piece to our team. There's myself, who you've probably heard too much from already, blabbering on. Been in public markets before. Started a company called New Strike with a partner. We were listed on the venture for a little while. We exited to Hexo. It's probably 4 years ago now. Kevin Epp and Sean Byrne both were in that sector with me. We had a great team, and we decided to kind of get the band back together for this. And our experience on the commercial side of growing stuff is something that we haven't seen too much in this industry, and we feel like we bring a really unique skill set to the table. So kind of next steps, next plans for the company are really bolstering what we have now with a little more cash in the coffers, getting to that route of an IPO. I think it was mentioned at the very beginning, potentially a dual listing, really focused on the US, on NASDAQ. Our competitors and our peers are listed there. We want to be on par with them. We want to have the same level playing field. We do feel that is a necessity. So we will be going that route and looking to raise some more cash at the moment. But that path looks like it's end of Q2 next year. Have some really nice engagements right now with a few US groups that we're looking to really push forward in the next 3 to 4 months and get to S1s and all that fun stuff.
Excellent. Very interesting story. I have a few questions for you, both from the audience and myself. With your ability, with your AI and photobiology to alter the plant, does any competitor have that same ability?
That's a great question. We feel, so we have three gentlemen on our team. So we have Per, who you saw on the deck, a couple decades of photobiology research and expertise. We also have a fellow on our team named Matt Mickens. Matt was at NASA, and Matt was in charge of growing leafy greens on the space station. Matt's single goal, his kind of singular approach, was how to increase the lutein content in greens so astronauts didn't go blind. So we feel that we've got a pretty unique team that has done things, frankly, out of this planet. Doing it here in New Jersey, I don't think is a far reach. So to answer that question clearly, I can't speak for our competitors, but what I can speak to is that we have a very unique skill set, and we feel like we've got a pretty good head start on a lot of folks.
Okay, that's great. Thanks. One question here is, what is your value proposition with regard to the quality of leafy food? How is it better and more nutritious specifically?
Yeah, so our products are not touched by a human. So it's effectively, if anyone's familiar with the flood and drain system, it's the plant sits on a tray, it's fed from underneath, and the roots uptake nutrient. And what that does is the plant isn't touched not only by a human, but isn't touched by effectively anything on the edible matter. So when we look at a plant, there's our components in North America are conventional and organic. There's a component in the EU that is conventional, eco, and bio. And bio is the highest regard for any kind of plant growth. We sit in that category. We are not touched by a pesticide or herbicide of any kind, and we're not touched by humans during our growth cycle. So for us, there is nothing that's higher quality than what we grow.
That's excellent. And one other question here is, are your tunnels purpose-built or converted containers? And actually, I have two questions, but go ahead. Sorry. You can answer that one, then I have another one.
That's a good question. We are not containers. We do not grow in shipping containers. We are a very different scale than that. That's all I'll say about that. No, we do not grow in containers. We grow in purpose-built tunnels that are efficiently structured to grow 1 million pounds a year. And what we do in a facility is we effectively bolt tunnels onto one another. So when we go from New Jersey in 1 million pounds to our next facility in 8 million pounds, effectively it's 8 tunnels side by each with shared resources like packaging and processing, et cetera.
So you cut down the labor costs there as well.
Absolutely, yes, absolutely.
You have picked the Eastern Seaboard as your rollout strategy. Do you see yourself rolling out anywhere else in the U.S., or you're just going to? I mean, there's a lot of people living in that area of the U.S., so you don't really need to go too much further. But, or is there too much competition in, let's say, California, etc.?
Yeah,
and
so
taxes are higher. So there you go.
Yeah, that's a great question. Great question. So our idea on the Eastern Seaboard is we can reach a lot of humans. Anything east of the Mississippi is where most of the produce is being shipped to. That's where we're going to attack to start. We produce right now for, let's call it $2 a pound all-in cost, which is virtually unheard of in this industry. Our goal as a company is to get to farm pricing. And when I say that, I mean at the farm pricing, which is about $1. Now, we do know in the next very short while, we will get very close to $1.50 and $1.70, and we'll start to creep down with some scales of efficiency. But the goal is once we get down below $1.50 on our COGS, we will start to move west of the Mississippi and start to compete closer to where products are grown. And I think everyone's taken this approach that we're a threat to farmers. And I would probably maybe skew that a different way. And I would say, if a farmer grows a product on 35 acres, we only need 1 acre to do that same job. So that, call it 34 extra acres that farmer has on any given product could be far more valuable for different resources, whether it's land, whether it's residential, whether it's commercial. So we think it's a conversation to have with traditional farming, not so much that we're moving on their territory and pushing them out.
Okay. Well, I guess we're over time now. Deb, Barb, do we have time for a couple more questions, or?
Sure. If Travis has time.
Yeah, fire away.
Okay. The level of commercial sales you have accomplished so far?
Yeah, so our partner facilities right now in Toronto and in Niagara are effectively not our P&Ls. We don't operate those facilities. So our commercial sales right now are on our equipment sales. So from Canada, New Zealand, we've sold, call it 20 million in equipment sales as of now. But in terms of P&L, we won't have that until our New Jersey facility opens up.
And I think one point I noted in the story when we first talked is the water savings that you really don't use much water at all.
Yeah, I mean, it's, I think it's, everyone talks about that 99% more efficient than a farm. Farmers use the spray and pray method where, they dump, about 40 gallons of water on a head of romaine lettuce, just hoping it will grow. But that leaching process and going into groundwater and who knows where it goes. But the point is that every ounce of water our plants uptake is far, far less because it's directed. Everything that goes into our system in terms of liquid water is recycled 100%. So everything the plant does not use, we recycle it, we turn it over, and we have a complete closed loop system. And that closed loop system allows us to obviously be efficient on a resource standpoint, but it also allows us to effectively be truly closed loop and put these farms in places where otherwise it's pretty difficult growing conditions.
It's pretty exciting, really. And one other question here, would you operate a franchise style business or build and operate yourself, or just sell tunnels for others to operate?
That's a great question. So when we first started several years ago, I think, cash was a concern. So the franchise model was at the forefront of how we were going to build out our scale and show our tech works. And, realistically, we do believe that building out wholly owned operated facilities is the best way to go. We control our environment, we control our partnerships. So that is the way we will go. Now, in saying that, if we have some really interesting folks that want to join the party, I think we're always up for discussion on that. But I think financially, our model shows that the best way for us to move forward is to own and operate our facilities.
Right. And the financing you're doing right now, I think we discussed before, was about $25 million at a $100 million valuation. Is that correct?
So yeah, so our current round right now that is going to fire up, I'm going to say probably Monday, being a little optimistic, is going to be 200 million Canadian valuation, and looking to raise, I'm going to say up to about 25. Yeah.
Okay. And if we have anyone interested in that, do we just contact you directly?
Yeah, absolutely. Yep. Absolutely. We can. I mean, everyone's seen the deck by now, but I think a more in-depth chat on financials, data room components, and where we're headed as a company, that I think is probably served best offline. But I think that lends to an interesting next 12 months for us.
Okay. Yeah, we certainly might have some one-on-ones or something for you. So we'll talk about that after. Okay, I think we're done. Are we done?
Sure. Thank you so much, Travis. Really appreciate it. And as Jess said,
Yes, thank you.
If anyone has any interest, feel free to reach out to us or the company directly. We can easily put you in touch. And thanks for everyone that participated today. Tina, are you going to come back on and say goodbye?
Yeah, sure. Thanks everyone for joining today. I think it was a really interesting lineup of companies. And as Dave mentioned, when he was doing his Devron presentation, it's a really overlooked space, I think, particularly in Canada, where there's a huge amount of growth for some of these companies. So it'll be interesting to see. I think they're all on pretty strong growth trajectories.
Yeah, for sure. And a special thanks to Steve Hansen for setting the table for the event. It was really helpful having his overview. And we will be posting each company's webinar on our YouTube channel in a couple of days. So feel free to check those out. And we'll leave up the live stream of the full conference. So feel free to check that out there. And yeah, thanks to all the participants. Thanks to the presenting companies, IMAFlex, Devron, CO2 Grow, Must Grow, and Elevate. If you have any follow-up questions, please feel free to reach out. And thank you, Jessica and Tina.